Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, January 4th, 2023. Before I click on charts like this and tell you all about it, please click like if you would today. It helps us out a great deal in being found on YouTube. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded for your viewing. That includes the daily Tesla and the daily Apple report. And if you would, please share the content with friends and colleagues. So with the fourth quarter vehicle production and delivery numbers lower than anticipated, the market is slipping back into this support zone, a band of channel support that has been targeted following a sell signal several weeks ago below the low 170s. I'll get to that in a moment. This is a target, 101.16, 112.86. It is a wide zone, I'll grant you that, but it is an area that can absorb selling through January. And from here, we can muster, I'll use that word, a rally over the next 3 to 5 weeks or so back into the 160s, the upper 160s. I'll show that in a moment. By the way, as you can see, the support resistance levels here, the 101.16 level is shown as our weekly support. 113.27, though, by the way, is the daily chart version of the same formation at 112.86. I wanted to point that out because I don't show 113.27 illustrated today. I will say that in the neighboring vicinity, we've got 102.68, 106 even, and 109.10. All of them able to contain intraday activity, but 113.27 is our soft pivot point for today. And it is, once again, the daily chart version of 112.86. If we happen to push or open above 113.27, 122.42 is in reach today. But know that, especially for you day traders, 113.27 may well contain a high for the day. I'd be careful, though. This is a zone of support that can contain longer-term selling pressures, and by that I mean into February. So, I don't think you want to be aggressively short here. I think if we close today below 101.16, you can certainly jump on board for a short sale into the 77.55 area pretty quickly. I'm going to show that in a moment. But holding above 101.16, once again, I'm going to say 122.42 in reach over the next 3 to 5 days. Over the next couple of weeks, the 140s, and over the next 3 to 5 weeks, the 160s in reach above 101.16. So if we happen to push today or open, I doubt that, but if we happen to push or open above 113.27, which is once again the daily chart version of 112.86, 122.42, not out of the question, and that is nothing more than a short-term channel top right now on the daily chart over the last week of activity. So holding above 101.16, I said a moment ago how 122.42 is in reach over the next 3 to 5 days. And if we push or open today above 113.27, 122.42 is in reach today where we can place a daily high. And 122.42 is also an aggressive upward pivot point through the rest of the week. And I'll say even into next, because keep in mind, we are in the bottom picking zone. We are presently testing a mid to longer term support around 101.16 to 112.86 that I already shown. And so that in mind, closing above 122.42 should fuel, I would call it maybe a short cover rally. There's plenty of shorts in the market now, I'm sure. A short cover rally to 148.37 within possibly several days of that, 3 to 5 at the most. And I'll say that also closing above 122.42 will make this 169.47 longer-term resistance area in reach inside of 2 to 3 weeks. I say 3 to 5 weeks now because we could get trapped for the rest of the week between 101.16 and 122.42. We could fill this area out, but just know that closing above 122.42, a pretty classic buy signal as we move into next week. 148.37 then expected by the end of next week. And over the next couple of weeks, 169.74. 169.74 is, once again, this is a weekly chart, this former long-term channel bottom that was considered a target following an early October sell signal. We bottomed out here for the better part of a month before closing below it 3 weeks ago. That set off the sell signal down to the 101.16 area. And so this area, as I've been saying, is our ceiling through February and even into later Q1. We can rally up to here over the next 3 to 5 weeks, as I've already said, and from here fall off again, perhaps to new lows over the weeks to follow. As I've been saying, I'm not comfortable being a long-term investor in Tesla, and by that I mean into later 23, unless this market closes back above this 169.74 formation, and we're a long way from that right now. Let's take a look at the downside, that if we happen to break or open today below this 101.16 channel bottom, we could test 88.03 intraday. Now, I have taken some time out and I've labeled some of the important levels on the weekly chart going back into early 2020, into mid 2020, 91 even. This area here was sort of a double bottom at 91 even. I have this as a minor point only because I think if we break or open today below 101.16, we could take that out by just a bit to 88.03. And 88.03 is the third chart of the day. It is a short-term, well, actually by most measures, near-term, 2 to 3 week channel bottom. 88.03 in reach today if we break or open below 101.16. And if we close today below that 101.16 channel bottom, we could, by Friday's close, that's a bit of a stretch, I'll say by the end of next week or sooner, this descending 77.55 channel bottom. And this formation is, we'll go back to the September high. That's a 4 or 5 month channel bottom, well suited to contain at least weekly selling pressures. But as I say, despite the fact that it could contain a weekly selling pressures, holding then below 101.16 will keep selling pressures building, in my opinion. If we settle the week out below 101.16, there's a case to be made that over the next several months, by the end of March or sooner, we could fall all the way back to 23.36. I know that sounds ridiculous, but that's what the charts are suggesting, at least from my perspective. So this 77.55 formation, I think this is one of the last things I will say. The 77.55 formation I'll be following in the days and weeks ahead. It is dropping at a pretty good rate. And if we close today below 101.16, it will line up over the next 3 to 5 days with this prominent high going back to the pre-COVID high. I think this was January of 64.59. So that descending channel bottom, that is the steeply descending channel bottom that if I were to draw it on the weekly chart would look something like this against these lows, will converge with 64.59 over the next full week of trade. But it's just a mere hesitation point, I think, on the way down into the 20s if we close the week Friday below 101.16. Until then, this is solid bottom picking territory, as I say. I know I keep reminding you of this, but I think sometimes these things need to be emphasized over and over again. Bottom picking territory we are in right now through January into February, and from here we can rally back into the 160s over the next 3 to 5 weeks. That is all I've got for Wednesday's Daily Tesla Report. I'll be back again tomorrow with Thursdays. You have a great evening. Please click like.